What's going on, ladies and gentlemen? Welcome. I am the Crypto Crow. This is going to be a big and detailed video. In this video, I'm going to be going over everything related to Bitcoin's price history, the altcoins price history, the variables between Bitcoin and the total cryptocurrency market capitalization, as well as Bitcoin dominance to the altcoin market dominance over a period of cycles. I'm going to be showing you a lot of this information. And ultimately, this is going to end up with potential price predictions for everything from Cardano, Solana, AVAX, Ethereum, DOT, you name it. There are going to be quite a few predictions in this, and they're going to be very extremely well calculated. I haven't done a video like this in probably a couple of years, so we're going to go ahead and dive into this, and hopefully you find a lot of good value out of this video. I've been kind of out of the game for a while. I've done content, but nothing quite like this. So I hope you enjoy. I hope it puts things into perspective for you, and hopefully it'll put a smile on your face the way it has mine. So let's hop right into it, and we'll start covering the information. Now, this is the first thing that you're going to see. I'm going to show you. This is Bitcoin's market cycle, basically the halving cycle. Okay, so I want you to just kind of keep this in mind, because we're going to be referencing this a lot on the charts, but this is where I'm pulling that data. Now, one of the other things that we're going to be looking a lot at is the cryptocurrency market capitalizations in the top 10 in various cycles, because this is going to be a very big deal as it relates to dominance and where the money goes once it hits Bitcoin. And we're going to be showing a cycle of this. Now, one of the first parts I want to show you, this is the historical snapshot of July 2016. Now, I'm basing these all off of what was in the top 10 of the crypto market cap in each part of a cycle. So from the time of the halving of Bitcoin and then the peak of that cycle post halving. This is July of 2016. And you can see the top 10s: Bitcoin, Ethereum, XRP, Litecoin, the DAO, NEM, Dash, Steem, MadeSafe Coin, Lisk, and then you had Dogecoin, Monero, Waves, and several others following that top 10. If we look into December of 2017, which was the peak of that market, you can see a lot of this changed. Bitcoin, Ethereum, Bitcoin Cash at number 3, XRP at number 4 at 72 cents back then, Litecoin, Cardano at number 6 at 51 cents. Make note of that, because this is going to be very relevant later. IOTA, which basically fell off of the world since then. Dash, which was a very prominent coin at the time, trading at the time at around $1,100. NEM at number 9, Monero at number 10, Bitcoin Gold at 11, Stellar Lumens at 12, and then EOS at number 13, which also fell off of the world. January of 2018, this is typically where the altcoins basically started coming down after their peaks, okay? Because what happened was Bitcoin peaked first, then the altcoin market had their day. Now you can see that Cardano rose up to, at the peak of this cycle, it rose up to $1.33, okay? It was at number 5 in the market cap. But ultimately what you're going to see is a pattern through every cycle as it relates to Cardano. And I'm using Cardano as a primary point of interest, because it basically is going to show the overall price action that we've known to come to expect with Cardano from cycle to cycle to cycle, because there are a lot of narratives around Cardano right now that are absolutely false, and we're going to show you exactly why in great detail. But we had Cardano basically peak out, which was, I think it was a little higher. I think at one point it actually hit the 4th or 3rd place in the market cap. And then you had Tron at number 8, Stellar Lumens pumped up to 9, IOTA at 10, knocking Dash out at number 11, EOS at 12, Monero 13, Neo at 14, which I used to really like Neo. This was supposed to be like the Korean Ethereum, and it just never took. Qtum, same thing. Qtum had a lot of potential, but didn't really go anywhere. Now we're going to move forward here to 10th of May, 2020. The top 10 market cap here: Bitcoin number 1, Ethereum, they never basically changed. They're pretty much always number 1 and 2 throughout. XRP was trading at about 19 cents at this point, because of course we know what the SEC was doing at the time. Bitcoin SV at 6, Bitcoin Cash at 5, Litecoin at 7. We come all the way down, Chainlinks at 11, Stellar Lumens at 12, and then lo and behold, we had Cardano in the 13th spot, trading at under 5 cents after after the big market rally. Came all the way down to the 13th spot. We've seen Cardano rise and fall anywhere from like the top 3rd or 4th position all the way down to like the top 13 or 14. But this cycle, the current one, it hasn't basically dropped below like 11, I think, or 12, but we've seen this time and time again. And of course, when we see Cardano drop, we get all the articles basically trying to FUD it, even though this is what's been happening since the very beginning. April 25th of 2021, you can see how the market changed there. Bitcoin, Ethereum, Binance Coin, Tether, which I don't like. I don't even count the stable tokens. But Cardano started to rise up again at 6th place, trading at $1 at this time. April of 2021. This is roughly when Bitcoin peaked. Okay, so when Bitcoin peaked at roughly, well, this is 49,000. The actual peak of Bitcoin at this time was the 13th. However, the second peak of this cycle, which we're going to dive deep into later in this video, the peak was around 65,000. So this is basically around the first peak, and then we got the second peak later on, which we're going to dive into. But Cardano doesn't actually peak yet. Okay, Cardano doesn't peak for a couple months later, but we're going to dive into that. Chainlink sitting at 12, Solana all the way down to $47.37. And at the time, this was up 46% on the 7-day. April 21st, April 21st of 2024, you can see this is basically where we've been, okay? Solana trading at the 5th spot, Cardano down at the 10th spot, trading at 49 cents. And you can just basically see how the price of everything has changed since then. Tron trading at the 15th spot, trading at 11 cents. Now, finally, we're going to look at September of 2021. This is after the 2021 peak of Bitcoin in April. This is how fast everything changed once Bitcoin peaked out. You'll notice Cardano sitting at the 3rd spot. This is down from its high of $3.14. And it's trading at the 3rd spot. Bitcoin, Ethereum, Cardano. This was September of 2021, folks. This happened in a matter of basically a couple of months. April, May, June, July, September, 4 months, and Cardano finally peaked after. Now, what happened was, it was interesting. We're going to dive into all of this stuff in the charts. But what you'll notice is if you look back at all of these, Cardano was basically bouncing all over from the 6th spot to the 10th spot to the 11th spot. And it didn't really matter. What mattered was when Bitcoin peaked out, a lot of that money ended up in Cardano, raising it up to the 3rd spot. And now what we've been seeing is post peak, it hasn't really left the top 10. Okay. And so we're going to basically be looking at that and calculating a lot as it relates to the market capitalization, because if you take out the USDC and the USDT, it's actually sitting at about the 8th spot in the crypto market capitalization. And that's basically a pretty good thing, because this could mean a significant sum going into Cardano after the Bitcoin peak. It's not to say that Cardano's not going to rise, but we're going to dive very, very deep into the market capitalization, the calculations of all of these tokens coming up next in this video. Now, I don't know about you, but I'm an absolute trading card game fanatic. From Magic the Gathering, L5R, you name it, I've probably played it. Well, I've never played Pokemon. I got to admit that. I've never played that. But this, ladies and gentlemen, is Wargrim, and this is coming very soon, likely within the next 60 days. Make sure you go to wargrim.io and click up here to join the wait list. This is a trading card game on the Cardano blockchain, unlike anything you've seen. This has been in development now for so long. I have been doing all of the art myself. I have a team from literally across the globe that have been building this out. You can check it out now. We do have internal beta testing and more. We have a lot of testing still to come. I just finished assets for over 250 cards for the first core set of the game, as well as 2 starter decks that everybody's going to be able to get. We're probably going to start giving some of this stuff out during Rare Evo coming up in August. So So if you're there, come to my booth. You won't be able to miss it. And make sure you sign up, because we're going to be doing some fun giveaways and things related to Wargrim and other things that I'm a part of. Make sure you go to wargrim.io, bookmark it, join the wait list now. You're really going to love this game. Demos coming very soon. Okay, so the next phase of this video is the total Bitcoin market capitalization and ultimately what we've grown to expect in crypto. Okay. Now, there's some interesting things in this that I want to point out, because I think that some of this is going to spell out ultimately what there is to expect in this market cycle in 2025. If you can see here, this area here is basically the period between the halving of July 2016 all the way up to the peak of December 2017. And Bitcoin's market capitalization, okay, grew all the way to about $343 billion. Okay, well, this is showing about 323 billion here, but it basically rose a total of 2,800% from the halving to the peak in 2017 at a period of basically about a year. If we move further in here, we can see that, well, this was basically a one peak cycle. All right. The 2017 was basically one peak in that market cycle. Here we can see ultimately what happened as a two peak cycle. We went from the halving here and we rose all the way up 711.62%. All right. We basically rode the price all the way up to about $1.3 trillion in market capitalization. Then we move to now. And what we're seeing now is that if I were to just cut, so let's just say we had 2,800% here, 711% growth. We always talk about diminishing returns, right? And I don't necessarily think it's a matter of diminishing returns as much as it's slower price growth as more people get involved. Okay. Now, as we're moving forward into this market cycle, what we can see here as it relates to the previous cycles is that the price action currently seems to be moving ahead much more in advance of the halving as opposed to after the halving. And what I believe has been happening here is that some of the price action growth that would otherwise turn this cycle into a two peak market like we had previously is actually pricing itself in prior to the halving, into the halving, and post halving. And we're likely going to be at a one peak cycle in the 2025 peak. This is my guess based off of everything. I've looked at so many different stats and details about the market, and I'm trying to share the nuts and bolts of it here. But ultimately, what we can see here is that the price or the total Bitcoin market cap rose up about 700%. If we were to basically cut that down to just 260%, we just average it out, 260% from where we're at now to the top of that is roughly $4.7 trillion in Bitcoin's market cap. Okay. So let's just assume that if Bitcoin were to get to about $4.5 trillion in this market cap, what does that mean for the overall crypto market capitalization? All right. And we're going to dive into the differences between Bitcoin dominance and how that falls off into the altcoin market and then back into the Bitcoin market, and what we can see playing out potentially between now and 2025 and where I believe the next peak is going to be. Now we move over into the total market capitalization. You can see very similar things here. This is the crypto total market capitalization over a weekly candle. We can see the total crypto market capitalization from July 16th all the way up to the peak was 5,533%. This was the period where there was so much money entering the market that ultimately anything you bought into was gold. Okay. All of us thought we were geniuses back in 2017, myself included. People would ask me, how do you have a whole chart full of crypto buys and none of them are in the red? And I'm like, I don't know. I just had a gut feeling, right? You don't know how to explain it because there was no explanation for it other than there weren't that many tokens in the grand scheme of the total crypto market capitalization. So anything you threw money into was likely going to go up depending on where you bought it. And then from here, we can see the halving in April of 2020. And then that basically moving up, that was 1,331%. This brought the total crypto market capitalization to $2.8 trillion by November of 2021. And yes, I'm calculating this based off of November of 2021 and not the first peak, because we weren't done. And I know I say this all the time, but I saw that this was likely going to be a 2-peak cycle back before April. And then when I called the peak in April on Twitter, and I told everybody, but don't worry, the market just peaked. Everybody flamed me. I came back when I landed in Puerto Rico, and I said, but don't worry, this is likely going to be a 2-peak market. But I could be wrong, is what I basically said. And sure enough, we did end up in a 2-peak market. And the reason why I believed a lot of this happened was because these charts lined up identically to the NASDAQ chart of 2007, which told me that the institutions were playing and they were trading these markets the way they trade all of the other markets, because they know how to move the market any way they want. And you'll see that market capitalization dropped substantially after that first peak. We went all the way down. We dropped 56% from that first peak. This is what I believe should have been added to the original peak. And I think we should have been somewhere up to where we're at now. That's what I think. I think that this peak was intentionally cut in half because the whales were playing the market. That's what I think. So if we were to look at that and we were to cut this down today, given where we're at, if we just cut this, you got 1,300% in the last cycle. Let's just say we got to 331% in this cycle, and that we were to peak out in September of 2025. We're looking at a $10 trillion market capitalization, folks. $10 trillion entering the space. Now, the caveat to this is that there are millions of cryptocurrencies right now in the crypto space. If you look up here, well, you can't really see it just yet, but if you look up here, there are 2.4 million cryptocurrencies in existence today. A lot of them are meme shitcoins that do absolutely nothing. So what do I think is going to happen with a lot of this garbage? Well, they're going to be exited. They're going to be pulled. A lot of the liquidity and the money that's in these meme coins is basically going to be sucked out and basically put into the more prominent tokens. And don't worry, we're not done. We've got a lot more to cover here. But I want to basically spell out that I believe that a lot of these meme coins are basically fabricated situations that are put out by VC groups and power pump players with these big underground communities. They launch a meme token, they send the signal out to everybody to buy in at the bottom, and they're basically more legitimized pump and dump groups. And that's it. That's what the vast majority of these are. And they rise and rise and rise. They bring in all of this new retail money, expecting to get rich off of a $100 buy. And they're preying on these people that believe they're going to turn that $100 into $100,000 in a couple of months. And then what happens is the owners, the founders, the VCs, all of these different groups associated with these basically exit, they rug pull, they do whatever. And what's happening is you're going to see a lot of this is happening on Solana, because Solana is really quick and it's really cheap when it works. The problem is that due to the fact that Solana does tend to shut down at random and it has a lot of issues, which you could see at myanalos.com, which is a website I launched. Go into the menu, look at some of the links in that website. There's a big readout from a couple of years ago where somebody broke down all of the different issues with Solana and why they believe that it is the way it is. It's going to be very eye-opening if you've never seen the article. I'd encourage you to check that out. And I'm not doing this to dump on Solana. I'm doing this because the price action of Solana is based off of an economy solely built around these meme tokens, all of the automated bots related to the meme meme token market. There's so much to it that's driving up Solana's volume, and I do believe that to a certain extent, a lot of it is artificial, and a lot of it is meant to ultimately, not that I'm saying it's at the fault of Solana devs, but it's just the nature of the chain, that a lot of this volume and a lot of this activity is ultimately focused around draining retail money and putting it in the hands of the many, or of the few rather, especially those that got into Solana when it was in a relationship with FTX, and it ultimately was pulled up by its bootstraps through FTX token and fake wash trading, like whatever FTX was ultimately doing with their token, because that ended up in a disaster. And now I believe that because they don't have that pushing up the price, I believe that it's ultimately this meme coin economy that they built around Solana. And I really do think that a lot of people are ultimately going to get very, very burned. And I think that a lot of that money is going to end up going into more legitimate projects, okay, on in blockchain. And we're going to basically dive into that. So stay with me in the next segment of this video, and we really start breaking down dominance, what that means, and how that affects price action moving forward, and ultimately where I think a lot of these tokens are going to end up that are currently in the top 10, top 15 of the crypto market cap. Okay, so now we're going to look at Bitcoin. And I'm going to end this segment with a Bitcoin price prediction. And I've got it backed up in two different ways. I didn't even realize lined up with each other until just now. So, because I was working it all out. Now, let's go ahead and jump to the chart, and I'm going to show you what I'm talking about. This is going to get crazy. So if we're looking at the previous cycles, now I've been calculating so many different variables of the market cycles and price action. It's crazy, but I've settled down on some of this stuff. Now, one of the key things that I look for is how many days from the halving to the peak. Now, right here from the 2016 halving to the 2017 Bitcoin price peak, we were looking at 524 days. You can see the little smiley face here showing that. Now from here, we got the peak. From the peak, we established the widest berth of the pi cycle indicator. That berth was established from the peak of the market cycle to that widest berth of 61.68% over a period of 321 days. That's not necessarily the bottom of the price, because the bottom is down here at around $4,000, but that was just the widest berth of the pi cycle. Okay. From there, we move into the 2018 market. And we have basically established from the widest berth to the next halving is about 556 days. Okay. So basically from the point where the pi cycle is the furthest apart from crossing over one another, which typically indicates the peak of the cycle, we're 556 days to the next halving. So that is from the widest berth of October 2018 to the halving of 2020. Okay. Now, from here, we move into this market. This is the 2021 market. So from the halving to the peak of November, we're looking at 540 days. We're looking at it's a very similar pattern, okay? Each market cycle. Now, what I find interesting is this. This was a two-peak cycle, whereas the 2017 market was a single peak cycle. And if we look at this, I made a note. Number 5, I believe the market was either intentionally manipulated down, or the number of people watching the pi cycle top indicator were misled into thinking April was the peak, causing an outflow, dropping the price until the market picked back up for a second peak. Bitcoin should likely have gotten to around $145,000 if we take into account the drop in liquidity, the drop in money, the drop in price action ultimately, and we were to just align that to the second peak, it should have taken us to about $145,000 in 2021, but it didn't. This market was cut in half. Typically, it seems that we go one peak, two peak, one peak, two peak. And that's basically, if you go all the way back in history, you can kind of see that is how things have worked out. Now, here, the widest berth we had closer to the second peak, which wasn't very long, was 43%, all the way down to, you guessed it, the widest berth of the pi cycle indicator, 66.84%. Isn't that interesting? Isn't that interesting? And then we move in to where we're at now. This takes us from the widest berth of the pi cycle, 623 days, to the halving, which is also very interesting considering the current price action appears to be about 2 months early, because we've got significant runs in the price leading up to the halving. So it's almost as if the cycle is being consolidated ahead of time so that we have one significant peak instead of two. October 2025, 550 days, one peak cycle is what I'm calling for this market. Now, another note. 623 days from the pi's widest berth to the halving, with the price action looking to be 2 months early in the cycle due to the spot ETF approvals and non-crypto money entering the space. By non-crypto money, I'm saying the number of people that are basically entering the market through paper vehicles like these spot Bitcoin ETFs. People that are saying, hey, take a portion of my 401k, take a portion of my retirement account, whatever. I'm going to go throw it over to BlackRock or Fidelity or any of these groups, and I'm going to get some exposure to Bitcoin. But they're not necessarily crypto bros. They're not people that are basically running out to exchanges, setting up their own wallets. Now, from here, we're looking at this. We can see this area of interest here, which is basically, again, the 26.56% birth of the pi cycle indicator, which is generally where we are before the market starts to run up. The question is, how far? Well, if we were to price this out or plan this out over a period of 551 days, which is the typical time period from the halving to the peak, and that takes us here, which I find extremely interesting. If we were to just cut this down to 234% from this current point we're at now, at this 26.56% birth, this takes us up to a $222,000 Bitcoin by October of 2025. Now, if we run hot and sooner, and we are 2 months early, this could happen in a much more parabolic rise, and we could hit this point probably sometime in August or September of 2025. Now, I believe that this is ultimately going to run a little bit longer because this is going to be a single peak market instead of a two peak run. And on top of that, this is my well, I'll read the second note here. Number 7, if I reduce the price action of the 4 lower cycle returns and set it to just 234% from the negative 26.56 of the pi cycle, this puts us in previous cycle time frames from the halving to the peak. This puts us at a $222,000 Bitcoin price in September of 2025 or July of 2025 if we run early. This time, I don't expect a two peak cycle. Now, I'm learning on making these notes. Now, this shows as October 2024, and I forgot that I had extended this out a little bit once I was reviewing things a little bit further, but I would basically say it's going to be pretty safe to bet between July, let's see. So we've got August, September, June, July. Yeah. So basically July to October is going to be let's just call that a window where we should be looking at the peak. Now, what's interesting is that I called this at $225,000 after doing a whole bunch of stuff, and I may not have been entirely clear based off of how I've calculated everything, because I kind of run through all this weird stuff in my head as I'm trying to figure all this out and put it in writing. But I went back to this and I remembered I calculated this out to be about $4.7 trillion in market cap for Bitcoin by the peak of this cycle. And I never thought, hey, why don't I calculate what $4.7 trillion would be and how that would price out in a single Bitcoin if there are 20 million Bitcoin at the time? Well, guess what? It came out to $234,000 per Bitcoin. I'm saying this all lines up. I'm saying this is what I expect to see at Bitcoin at the peak. Basically $234,000 sometime between July and October of 2025. Now, the question from here is, what happens to the altcoin market? If all of this were to come to fruition, and let's just assume that our crypto market capitalization grows the way I expect it to, Bitcoin's price grows the way I expect it to, what does that mean for the top 10 in the crypto market? And to do that, we're basically going to go and we're going to calculate what those numbers look like on a grand scale. And we're going to basically reference what previous market cycles did with the top 10 and the growth of Bitcoin and where we can expect these numbers to fall in this current cycle. So stick around. We're going to get right to it. So now what we're going to study is dominance, Bitcoin's dominance, as well as how that changes throughout each cycle. Now, if you look back here, you can see that before 2017, well, early into 2017, before the big ICO rush where smart contracts were introduced through Ethereum, basically Bitcoin's dominance was exceptionally high. Ultimately, there were other tokens out there and forks of Bitcoin, but not necessarily what we saw in 2017, which was a significant push for what we would refer to as altcoins or anything other than Bitcoin for the most part. And what happened is when that started happening, we saw a major distribution of Bitcoin and the value of Bitcoin being spilled out into a lot of other assets until we got to June 2017, which was basically when all of the peak of the market ultimately was December 2017. And so by June, we saw Bitcoin's peak basically spill into the altcoins, ultimately reducing its dominance in the cryptocurrency market capitalization to 40%. And then we saw that again once we had the peak, further down in January, which was really the altcoin peak, where Bitcoin's dominance dropped down to 34%. Then what we see, it should be around 2021. Yeah. So January of 2021, we had Bitcoin's dominance at a height of around 70%, almost 70%. And then by the time we got to April, May, which is where Bitcoin peaked the first time was April, that spilled over into the altcoin market. And then by May of 2021, Bitcoin's dominance was down to 38.7%. But what you'll see is that throughout all this time, Bitcoin's dominance really hasn't recovered entirely. You can see after that big ICO rush, Bitcoin's dominance came all the way back up by December 2019. And then what was this? January of 2021, it came all the way back up 69.5%. So basically a lot of the value from a lot of those altcoins that just weren't going to go anywhere anymore, basically a lot of that money went back into Bitcoin. But we didn't see that as much now. A big part of the reason I believe that we're not seeing that happen right now is because there are a lot more altcoins, layer one blockchains, smart contract chains like Cardano, for example, and others that basically have significant real use case and real significant volume. And it's not really leaving those projects. What we're also seeing is that the Bitcoin's dominance has been getting chewed up by the valuation of a lot of the meme coin garbage that's out there. And once one ends, it pumps, it dumps, and then it just rinses and repeats into a new altcoin or a new meme coin. And it just keeps going, which is why we have well over 2 million altcoins in the market. So we're going to dive into what this means overall for price predictions in a lot of the altcoin market based off of where we've been in previous cycles and where we're going in this cycle based on altcoin dominance as it relates to Bitcoin and the total value market cap. Hey, real quick while I have your attention, and this is not a paid segment that's coming up, but I want to tell you about something that I discovered that I feel you may actually find quite a bit of use with. That is functional across a large variety of blockchains. Now we're going to go ahead and take a look at Houdini Swap. This is HoudiniSwap.com. Keep transactions private. Privately swap, send or bridge with magical ease with no trace between sending and receiving wallets. It's safe, compliant, and always the lowest cost. This to me is something that I find very valuable, and this isn't about trying to keep your swaps or your exchanges away from like the government or any of that stuff, which is obviously the narrative that they try to present. And they say this is compliant. I'm not quite sure how. I'm going to look deeper into this. But for me, this is about keeping prying eyes away from transactions that I might make online to anyone trying to track them. I don't necessarily want hackers or people with ill will able to see what all I'm doing with what on the blockchain. And that's just me. Maybe some of you don't care, but as somebody that is a fairly public figure, finding something like Houdini Swap could quite easily become a very valuable asset to me. Total swap volume over $498 million worth of transactions over the course of 164.68 thousand total transactions. And you can see all the blockchains. You've got Monero, Cardano's number 2 on the list. Just a lot of different blockchains that are available to be functional on this. So make sure you check it out sometime in the not so distant future. And let me know in the comments below, what do you guys think of Houdini Swap? Is this a win? Let me know. I'd appreciate it. So now we're going to look at Cardano. This is going to be the first prediction because it's probably the one most of you are most interested in, including myself, which is why it's the first one I worked up. But there's a lot of things that have changed in the market, and there's a lot going on in the space, obviously. New money is getting into Bitcoin. There's just new money entering the space already, okay? And never mind the current dip that we're seeing. I don't worry about those so much. That's just kind of the nature of things. And as institutions continue getting into the space, the narratives are going to change throughout. A lot of the stuff that we're going to see is going to be paid narratives, pumping this shit coin, pumping that shit coin, narratives around how this blockchain is better than that blockchain and all kinds of stuff. But the majority of that stuff is really garbage. What really matters is what happens with like the government, interest rates, you know, the economy overall. That's really what's going to help dictate what's going on in the future of crypto, especially as we continue throughout 2024 in this election year. Things are obviously crazy already. They may very well get crazier, but how does that play into Bitcoin's narrative? We know that companies like BlackRock and a lot of these other companies out there, I don't even need to name all of them. There's like 14 or 15 different companies really piling into blockchain, okay? And they're really buying into a lot of these different assets. They may make their narratives primary to Bitcoin or Ethereum right now, but that's going to continue to grow. And the number of different blockchains that these groups start investing into and creating paper investment vehicles into are obviously going to grow. And a lot of them are going to grow based on fundamental use case and what these blockchains have to offer, as well as to some degree, how much some of these institutions want to control these blockchains, depending on how they operate and what they're doing in the world, which is one of the reasons why, unfortunately, I believe that it's likely we may see a Cardano spot ETF at some point. And I personally don't want one, but let's go ahead and dive into what we're looking at in terms of Bitcoin or Cardano's price prediction, because I think this may actually shock you a bit. It kind of shocked me because I didn't know what to expect working things up this way, but let's take a look given the recent numbers. Now, back here in 2017, we're going to look at this market cycle first to get an idea of what's going on. Bitcoin peaked on December 17th of 2017, and its dominance was sitting at 50.12%. over Cardano, which was just 2.02% at the time. And this was Cardano's first peak. This was Cardano's first big market cycle, okay? This was a period, there was a period from the time Bitcoin peaked to the time Cardano peaked, which was 18 days. Not much time at all. Bitcoin peaked right after in January. Cardano peaked along with the rest of the market. And this happened on January 4th of 2018, 19 days after Bitcoin peaked. And at this point, Bitcoin's dominance dropped from 50.12% to 37.89%, while Cardano rose in this period to 3.44%. Now, over the course of the market cycle, we saw Cardano and Bitcoin, as well as other altcoins in the market, kind of give us an ebb and flow of the price action. Now, just so that you understand as well, this is what I'm looking at for dominance numbers. So the first one I've looked up is Cardano, and you can see where Bitcoin's dominance was against Cardano in this chart. And this is provided by CoinGecko, which I'm really learning to appreciate quite a bit. So that's where I'm getting a lot of these statistics. Now, moving forward, In the 2021 market, Bitcoin peaked at 52.48%. This was in April 13th, in the first peak of that market cycle, while Cardano was just at 2.02. This is years later, and Cardano rose up, which I'm going to show you. At one point, it rose up to as high as 4.25% in dominance, but that doesn't really matter right now. What matters right now is Bitcoin peaked at 52.48%, while Cardano is sitting at 2.02. Then 141 days later, Cardano peaked. And this was also towards the second market peak. It was closer to the second peak of Bitcoin. So on the first big peak, after Bitcoin peaked, mind you, 141 days later, Cardano's price peaked at $3.14 with Bitcoin at just 40.40% dominance, and ADA rose at 4.12%. And this wasn't even Cardano's peak in terms of market dominance. And I made a note here. I assume the dominance of Bitcoin and other lower ranked altcoins spilled into the top 15 of the alt market, basically saying that when all of this was transitioning, I believe that this was a period when a lot of investors pulled their money out of like lesser known or more risky assets because they weren't quite sure what was going on, and they started putting their money into assets they knew were a little more risk averse, such as Cardano. In my opinion, this isn't financial advice. I'm just giving it to you as I see it. Now, 68 days after Cardano peaked, Bitcoin peaked again on November 8th of 2021. And at this point, this is 68 days later, Bitcoin peaked again, higher than the first at 41.37% dominance. Original peak was at 52.48% dominance. This second peak, even at a higher price, was at a lower dominance than it saw in the first time. Cardano was sitting at 2.35% before the entire market crashed to new lows. Now, number 6, at multiple points over the cycles, ADA dropped to the half of a percentage range of dominance before taking off, meaning Cardano's dominance was at 0.5%, not even 1 full percent of the total market dominance. And we've seen this, and I've looked at the chart. You can look at it over here. You can see it's happened multiple times. There was March 2020. Currently, we're sitting at 59%, so we're a little higher than average. But if we go all the way back, I mean, we can see, well, we don't want to go back before it was created, right? But you can see multiple points in time has Cardano's dominance been under 1%. So I'm not overly concerned with that. March 25th of 2020, 0.50%. Yet August 29th of 2021, it rose all the way to 4.25% in dominance. This shows a common occurrence with Cardano. However, Bitcoin's dominance continues to reset lower against meme coins and other nonsense. Basically, as there are more shit coins entering the space, it's all ultimately appearing to pull value out of Bitcoin's dominance over the long term than it's affecting things like Cardano and other altcoins, which I found really interesting, and it's a discovery that I made doing this video. March 25th, 2020, Bitcoin's dominance at 66.48%, while ADA was just at 0.50. However, currently, Bitcoin dominance sits at 51.83%, with ADA at a 0.59%, which tells me Cardano is less affected by the influx of shitcoins than Bitcoin is. You can look this stuff up yourself, folks. Now to the prediction. If we were to, in fact, go all the way back and we settled out here and we got to a $10 trillion market cap overall, Bitcoin rose its price up to around $230,000, give or take. Ultimately, that calculation means if we just reached 4% of the total market capitalization of $10 trillion, that gives us a $400 billion market capitalization over a circulating supply of 37 or 35.7 billion ADA, and that takes us to $11.19. $11.19. Sometime within this window of July of 2025 and September, the end of September of 2025, that's where I think the market cycle is going to peak. And now, the interesting thing is the major variables to this are how high does the overall market cap go? Now, I've shown the history of how the market capitalization has grown, how Bitcoin's market capitalization has grown, and it's grown exponentially over time. And it's in pretty much an always up sort of momentum for the most part. I mean, yes, we have our ebbs and flows, but every cycle, everything magnifies multiple times over it did the previous cycle. However, the overall percentage is lower. So it's an interesting kind of situation where we're watching everything go up, but it's not going up necessarily as high as it did the previous cycle. And we calculated everything based off of fractions of previous cycles. And we're still at a $10 trillion market cap by the peak of 2025. And I honestly believe that some of the catalysts to this will very likely be real world assets being tokenized on the blockchain, likely in preparation of the 2030 cycle, more, not necessarily towards the 2025 cycle. We're going to see that narrative grow over the course of 2024, but I think we're just going to be planting seeds. I think we're going to be introducing new investment vehicles to the space that represent real world assets. I think we're going to see a transition out of meme coins, which is one of the reasons why I predicted previously that I can see Solana really enjoying its last market cycle in 2025. I think that's it for Solana. I truly do. And I'm not saying that as a hater, but if you look at the numbers and you look at the ecosystem and how it's basically all pushing forward based solely on a lot of weird stuff, and then the meme coin economy, I don't think the meme coin economy is going to last much longer than this cycle, because I think the narrative is ultimately going to change from that into new things. And the new things are going to be AI tokens that have a real world use case. Right now, a lot of it is speculation, but I think these AI tokens are going to end up with more significant real world use cases. We're going to see them more on some of the top tier blockchains like Cardano, Ethereum. Maybe we see some of that stuff on Solana. I don't know. We'll see. I don't think a lot of these major companies are going to want to launch projects that are really, really sensitive like that on blockchains known to fall apart or crash or just basically get locked up for a week. I just don't see that. And I know I sound like a hater and I don't mean to, but there are a lot of people out there being paid to push this Solana narrative, being paid directly. And many of them are not in the US and they're not disclosing it. Many of them have significant bags that they acquired back in the 2021 peak before everything fell and before a lot of the stuff happened with FTX. So they're still pumping those bags as best they can, hoping they get to a price point where they can exit out of a blockchain that I'm sure most of them know is just not realistic in terms of the grand scheme of blockchain technology, decentralized blockchains, who's controlling what, et cetera, et cetera. It's just not a narrative I think anybody with any brain cells would really buy into willingly unless they were being paid. And we see evidence of that all over the internet. Some of you may say, of course, I'm going to call $11 on Cardano. I have a bunch of Cardano. I've been a Cardano bull since 2017. But many of you guys that watch my channel know I don't just root for Cardano because I expect the price to go up. If I was like that, I would be on Solana's train right now with everyone else. Let's be real about it. Solana's number does go up. It's getting pushed significantly by the meme coin economy. It's built for itself. While I don't expect that to last, what I do expect to last many, many, many years into the future is Cardano, based off of its fundamental use case, its growth of use case in Argentina, in Dubai, in Africa. I mean, literally all over the world with new ones coming. And I think that that's going to be a significant measure of interest in where a lot of this shitcoin money ends up flowing into, whether people like it or not. And I just see that being the case. So I'm going to be back with another prediction as I continue to move down the list. And I'm going to basically give you what I ultimately believe is going to be the top tier. I personally am still expecting to see around an $8 Cardano. I know that if given a $10 trillion market cap and all of these things in the best case scenario play out, then ultimately, maybe we could see an $11 ADA, but I still am holding strong to about $8. Now, if the narrative continues to pick up and more people start expecting to see an $11 Cardano, then what's going to happen is if the market does peak at around $8, those that are willing and waiting for an $11 ADA because of the numbers and the narratives associated with that as they continue to spill over. I've seen, as high as $35 ADA, so forth and so on. The people that are waiting for the $8 are likely going to start cashing out at that point, maybe even before, sometime between 6 and 8. And ultimately, that's going to start putting a squeeze on the actual cap that can go into raising the price higher. And the people that are waiting for $11 or more are likely going to be still holding their bags until they realize the number's not going back up, and maybe they start liquidating at around $4 or $5. That's just what I see happening. So it is what it is. I'm always right sometimes. Now we're going to dive into Solana, and we're going to get into a Solana price prediction that I'm going to be very unbiased in this prediction. Now, the numbers aren't going to lie. It is what it is. And, I have my beliefs about Solana. I'm pretty sure if you're familiar with this channel at all, you know what those beliefs are, but I'm going to share more specific details as to why I feel the way I do about Solana, why I generally stay away from it. And ultimately, we're going to let you make your own decision as to what you think the ultimate outcome may very well be. And we're going to provide a lot of information to help provide that kind of perspective so that you can make an educated guess and you can further do your own research on Solana and its ecosystem and figure out if this is something you want to get into. It is what it is either way. I hope you do very, very well regardless. For me, cryptocurrency is all about everybody doing really well. Unfortunately, there are a lot of bad actors in the space looking to take advantage of the unsuspecting, and we've all learned a hell of a lot since 2017 and beyond. And this is just one of those projects that I know is very popular among a particular group in the crypto space, and we're going to go over some of the details. So let's dive into this article. Before we dive into the charts and we go into the calculations of things and establish our price prediction, I want to go over some of the details as to why I think Cardano is going to act the way it is in this cycle, because ultimately I believe that this is going to be Solana's last bull market. I do. I've said it before, and I'm going to say it again. What happens between now and the peak of this market cycle is really going to depend on, I believe, the public perception of the blockchain, what has changed, what has gotten better, what has gotten worse, and basically the overall economy after the meme coin craze has died out in favor of more fundamentally sound projects, which I believe Solana lacks. So we're going to go over these details now. Now, this is an article that was written a while back by Justin Bonds. And this article breaks down a lot of kind of how Solana got its start, how it grew, some of the issues that were encountered with it. And I'm basically just going to cover, I'll throw this link in the description, but this ultimately, I'm just going to read the highlighted notes and let you guys dive in if you want to for more information. But in 2022, the Solana blockchain went down at least 9 times as a consequence of their own design decisions. Now, this in itself is a big deal because this has obviously continued on into 2024. Most recently, I know the blockchain shut down basically for like an entire week. And it's not anything that any significant use case or sensitive use case, I believe, would put to the test on Solana. I mean, if I were running any kind of business, I don't think I'd feel comfortable putting it on a blockchain that I know is prone to shut down. Birthed in fraud, in early April 2020, the Solana team stated that the total circulating supply was 8.2 million tokens. However, in reality, the total circulating supply was actually close to above 20 million, betraying the promise of the original investment terms. And there was a whole fiasco about this that basically spawned different class action suits and a lot of other things related to this information. It was also especially difficult to verify these claims as there were no explorers capable of checking what was really happening. When the Solana team was confronted by this, they simply claimed it was up to the community to build out this functionality. Basically saying, if you want to be able to deep dive into the on-chain metrics of our blockchain, you have to build it. We're not going to do it for you. And I found that very interesting. A third party found an unlocked Solana wallet containing 13 million tokens. It was only once the Solana team fully exposed to these lies, that they decided to release a Medium article basically admitting to the fraud, explaining that 11 million tokens were loaned out to a market maker while promising to get these tokens back and burn them within 30 days. This promise was made on numerous occasions in the following weeks. And then basically they did write an article about this market maker and what the deal was, but I still don't think that went very well. On May 23rd, the Solana team announced that they were only able to retrieve 3.3 million out of the 11.3 million tokens they had loaned out, deciding to instead release 8 million new Solana tokens into circulation to meet their commitment to burn without any announcement beforehand. Just a lot of underhanded ways that they've been going about things literally from inception. Fake transactions per second. We see a lot of this online. We see a lot of this argument basically touting Solana's transactions per second, but a lot of people know that this just isn't real. But a lot of the Solana buyers and a lot of the people that really don't seem to know any better, they just kind of buy into whatever headline is pushed, thinking that that's legitimate. By January of 2021, it had been exposed that the TPS for Solana was massively inflated as Solana counts consensus coordination messages as if they are transactions. This caused an apparent 100x increase in TPS, and this is still true to this day, which means that the majority of TPS shown by most block explorers are still fake. The below chart shows the ratio of real versus fake transactions. The tiny purple part of the bar represents real transaction volume. So you can see that minor fractions of what they're basically touting as their TPS is actually real. Now, I haven't deep dove into lately, like in the past year or two. I think this article is from like 1 or 2 years ago. I'm not 100% sure. I don't remember. I don't know exactly when this came out. I think it was, so this was in 2023. So this is basically a year old. So I don't know exactly what all has changed since then. Maybe some of these things have changed for the better. You'll have to educate me in the comments because I would love to be privy to it. But I'm doubting it. So the crazy thing here is that there is no good reason for this design choice, as the problem with the design is that validators still have to process these transactions. Validators have to pay the transaction fee for these consensus transactions, unlike almost all other blockchains. This results in validation being far more expensive than it needs to be, and it unnecessarily centralizes the network. Estimates are upwards of $6 million USD in order to run a validator profitably, a huge barrier to entry. The strange thing about this specific design choice is that there is no trade-off. And basically, they're basically saying to run a validator, it's going to cost you like $6 million, which is probably why it's a lot of major whales and major players, VC groups and the like, that are running these things. They're the only people that can afford them, which is also one of the reasons why I believe they're constantly pushing paid narratives in favor of Solana, because the better Solana does, the better these very expensive validators do. I could be wrong. Again, correct me. This is my opinion based off of what I read and what I see. Caught lying about TPS. On September 4th, 2021, Solana was experiencing a large amount of transaction failures. This was because a large number of transactions were all of a sudden hitting the network. I consider this to be a DDoS attack if the event can be proven, though I have debated this definition with Anatoly, the founder, I guess the CEO of Solana. The official Solana Twitter account, Solana Status, claimed the network was brought down by doing 400,000 transactions per second. This was an objectively false claim designed to make Solana look better than it really is. Either way, this did eventually lead to the network continuously forking. After this started occurring, the core team decided to restart the network based on their own snapshot, revealing the extreme degree of centralization present in Solana. That is a big deal many people choose to ignore in favor of number go up until something happens where it doesn't. And then what? This claim of achieving over 400,000 TPS over this time period was categorically false. This is because if transactions do not make it into the blockchain, they cannot be counted towards the TPS limit. As TPS is a measure of network capacity, Bitcoin can even handle higher loads on its mempool. Transactions were only in Solana's equivalent of a mempool, Gulfstream, which does not count towards TPS. Evidence was and still is all on chain, as the blocks clearly show a far lower TPS compared to the 400,000 Solana claimed. Now, this is a really big one. This is the article that this is the claim that we see constantly with people promoting Solana, TVL. We see Cardano's actual TVL due to staked volume that are delegated to nodes and off exchanges. We see nobody cares about that. People aren't counting that, even though that's a part of what is the value locked. It's not on exchanges ready to be traded and so forth. But then they favor Solana's TVL. On the 5th of August, 2022, a bombshell CoinDesk article exposed that the majority of Solana TVL was fake. This was later confirmed to be an open secret within Solana, as two developers pretended to be 10 plus devs and counted the same TVL over and over. This accounted for more than 70% of Solana's $10 billion TVL at its peak. And then you've got some information here to support some of this stuff. Dangerous design trade-offs. In my view, Solana is not innovative at all. There are some interesting features here and there, but its core design was defined by making reckless trade-offs in fundamental design while pretending as if this is innovative. Most VCs just did not understand that the engineering trade-offs and the inherent risk this involves. Dangerous design decisions are not the same as innovative. Deceptive marketing actively blurs this line for many reasons. Specifically, proof of history and turbine. A consequence of POH is the deterministic block creation. Before Solana, almost all blockchains used non-deterministic block creation, as it adds to security and censorship resistance, as you cannot predict who will create the next block. Instead, in Solana, it is possible to predict and therefore attack the next block producers in line. For instance, attacking the next 100 validators in line instead of attacking the entire network. This attack also works regardless of scale, thereby severely reducing Solana security. You know, everybody talks about the cost to attack a blockchain, like you need to own basically 51% of Bitcoin to do a 51% attack, et cetera, et cetera. Well, this is basically saying that Solana was done in such a way that you can basically do what would be otherwise categorized as like a 51% attack with basically just a line of the inline blocks. And so that is a big deal. Solana security is not just reduced against DDoS attacks, since this attack can be combined with a 51% attack, as an attacker would not need 51% stake to carry out a 51% attack due to POH. An attacker could DDoS next stakeholders in line and thereby gain control over the network. Combining turbine with POH leads to even more dire consequences. What's funny is that Solana just ran into an issue where something like this was happening with some of their validators that were subsidized by Solana, and so Solana cut them out of the ecosystem entirely and basically stopped those nodes' profitability, which is also a very centralized thing, which is interesting. The Solana network has an atrocious history of crashes, downtime, and network outages. In 2022 alone, the network went down at least 12 times. So this is a 2023 article talking about 2022. So, and I'm guessing this was early 2023 because the network has continued to go down and crash consistently all the way up until like a few weeks ago, I think was the big one where it went down for a week. This is why I have put together a short and incomplete history of Solana downtime, and then you can go through all that. Dangerous vulnerabilities. On the 2nd of August, more than 8,000 user wallets were hacked due to an exploit involving some wallets sending unencrypted private keys online. This was not strictly the Solana team's fault, but it is endemic to Solana's reckless culture, attracting even more risk. this just continues to go. I mean, there's just so much. And I feel so much of this is snowed over or some way kept from people. I'm not quite sure, but it just does not seem that people care that much, which blows my mind. Most VCs just do not understand the engineering trade-offs of the inherent risks involved, as the Solana team has consistently displayed a pattern of bad behavior. Solana is likely purposefully tricking non-technical investors with technobabble, such as counting consensus mechanisms as transactions, which I covered in more depth earlier in this article. This is how Solana rose to prominence, by taking dangerous design shortcuts while doubling down on some very bad security assumptions. There is clearly still a severe lack of understanding of blockchain fundamentals, which Solana has taken advantage of, as I would not touch Solana with a 10-foot pole. And there's just a lot of there's a lot of other information, details, conclusion, and so forth. Now, this is what it is, right? Like, I'm only reading all of that. I'm not trying to hate on Solana. I don't like it. But this is one of the most clear kind of ways of explaining a lot of the reasons why I have not cared for Solana all these years. And there's a lot more coming, because we're going to look at the price history and what has happened in Solana's history, where it's at now, where we believe it's going to be by the peak of this market cycle, and of course get to the predictions. So we're going to go ahead and dive right into that right now. Of course, obviously, we have this where we talked about where I believe the Bitcoin market heading, the window of the peak sometime between July and potentially October of 2025, even though it sounds like forever away. So we're looking at Solana's price action now. Number one, Solana dropped 81.54% over 7 months before the FTX news. Okay, so if we had the peak up here, of course we dropped, we had a spike, and then we just tanked. That was 81.54%. Most blockchains drop around 80% against USD in the entirety of the market cycle, but not Solana. It dropped 81.54% over 7 months, and that was basically in the middle of the bear market. Number two, an article drops about FTX's FTT supply on November 2nd. When we were looking at this, you see a fairly steady stream. Obviously, you see a pretty significant drop down here. I'm not sure exactly what caused that. I didn't go back and look. What I was interested in is when news of FTX and their FTT token supply came out on November, that came out right here. And what happened is we had a huge hard crash in Solana. And basically over this point alone, it was another 80% drop. Okay, it was an 80% drop from where it was. Solana drops another 80% after the FTX collapse. Why was Sol so deeply affected by the FTT token? That question's never really been answered. We know that it was Sam Bankman-Fried's second largest holding, apparently, when it comes to FTX, which I also find interesting considering FTX has very limited exposure to the market. It basically came out on the market, was adopted for some reason by all these big whales and all of these major players and exchanges and you name it. And it hadn't even been around to prove itself very much. It just became the talk of everywhere. And we still see a lot of this narrative kind of playing out today with a lot of paid features and a lot of paid articles. Bankruptcy of FTX. On November 2nd, 2022, CoinDesk published an article stating that Alameda Research, a trading firm affiliated with FTX and owned by FTX chief executive Sam Bankman-Fried, held a significant amount of FTX exchange token, FTT. And then that's what transpired. Now, moving into the grand market cycle here, you can see Solana, I mean, this is basically all the way back in April of 2020, okay? This was all right before Bitcoin's first peak. This is very interesting because it basically just popped on the scene and then rose with Bitcoin all the way up till almost the day of Bitcoin's peak. I find this very peculiar personally. June 2021, Solana Labs sold $314 million worth of SOL token to a group of funds led by Andreessen, Horowitz, and Polychain Capital, though neither mention it on their Wikipedia pages. So I find that very interesting because Solana started to rise up a bit and then tanked, right? It just had a significant drop down here. But then they sell $314 million to these VC groups, and it kind of got an immediate pump at that point, came back down, but started following ultimately the support at that range before it rose substantially along with everything else in the market, but primarily in line with Bitcoin. So before this deal happened, you can see that Bitcoin peaked all the way back here. Okay, so basically here on April 13th, 2021, that was when I called Bitcoin's market peak on Twitter to the day, and everybody went nuts. They were like, Crow, you're asinine, you're stupid, you don't know what you're talking about, how dare you, why are you trying to hurt the market, like all of that craziness, right? But the market did in fact peak that day. And what happened was nothing with Solana. Now, this is typically the post-Bitcoin into the altcoin market pump, and it wasn't that substantial before it started to tank almost immediately after. This is a daily chart, folks. So basically, over the course of just not that long, 2 weeks, Solana tanked. Then it made this deal with this venture capital group selling $314 million. I don't know if this was a cry for help or what, but over a period of time, we got to this point here in July of 2021, which is basically, well, this period here was the bottom. Okay. So the bottom of this cycle's pump was right here, and that was around $18, $19. Then somehow, some way, we went from $19 post sale to this VC group, and boom, it went all the way up to $218 for this first peak, which was Solana's first peak, all the way up to its high of around $270. I think its actual high in a wick was around $280. And this was in line with Bitcoin's second peak of the market as well. Often, when a funded SOL meme coin launches, it buys paid article placements, trashing Cardano in favor of the latest new meme coin in efforts to capitalize on the ADA community. Now, this is a practice that I've seen time and time again. Every time I see a new Solana, article pop up or a new Solana meme coin launch, it's always as part of some paid advertisement, basically talking about how Cardano investors are leaving in droves in favor of new X shitcoin, right? And it's like this narrative keeps getting recycled over and over and over as they're trying to generate attention away from Cardano and into Solana's ecosystem ultimately. And then it doesn't take that long before a lot of these tokens get rugged and people are burned. Now, this is Bitcoin and Solana's dominance chart. And if you look at the history of Solana, it never really reaches a point where it goes beyond around 3% at its peak. Okay, 3.05%. That was March 21st of 2024. So that's about right now. And what's interesting is this is around the peak, I believe, what is ultimately going to be the peak of Solana's meme coin ecosystem. So if we're looking at Bitcoin's dominance at around 50%, Solana at around 3%, is it safe to assume that even if this were Solana's like last bull market, that it's still likely going to do pretty well, given that there's still room to grow, for one, based off of where we are in price, currently trading at around $143. We see number go up. Anytime the market goes up, Solana generally pumps. Solana generally pumps because the majority of the Solana ecosystem are meme tokens, right? So meme tokens by its very nature generates community after community after community of people that they may be pulled into the particular meme token, but then they also end up interested in the layer one that token's built on, which is Solana. Now, Number go up, so all else be damned. Everything that I've read, everything that I pointed out about Solana to date, which there's so many things that have happened since that article, but it doesn't matter. Number go up, right? So let's take a look at what I think the potential market top is for Solana this time around. Now, it's not too shabby. I'm not going to lie. And I'm trying to be as non-biased as I possibly can in all of this. I'm just letting everything speak for itself for the most part, but we're going to look at it. You'll see this is basically Solana's price action since inception. Ultimately, this goes all the way back to like April of 2020 on the far left here. If we zoom out and we look at what we see here, we can see that Solana's actually been kind of not doing so hot. We had the significant run up here where number go up. And I'm not 100% sure why number went up the way it did, but ultimately it came up 932%. That is significant. Now, I'm not going to get into why it went up or any of that stuff because it just doesn't matter in the name of this video. But what we're seeing is that it basically bounced off of this trend line here that was established all the way from the market peak, and it said, no, it's not ready. It's not going to go that much. Now, what we're seeing now is it's just basically new lows. Okay. So it's lower lows on the way down, and it's really struggling right now on its daily candle. But of course, the difference between me and what the news will tell you is you'll see, if I were writing an anti-Cardano article, I would say, Cardano drops, let's see, I would probably start here, right? Like, why not? Cardano drops 25% over the short term. Is this a dead chain? Is Solana or is Cardano gonna survive, right? And I would create this narrative, and then I would probably pump a shitcoin on a different blockchain. Like, that's how the media works in crypto now, because it's all for sale. And I've got some stuff coming. I'm going to show you that this is all for sale. Now, the reality is, though, is Solana's not dead. It's not done. It has a booming ecosystem, even though I believe that while Solana has a lot of issues and the ecosystem on Solana has a lot of issues. There's all the analogies I want to make are really bad, and I just don't want to make that. But the people of one kind attract others of the same kind. I guess I'll leave it at that. Now, this is where I see the price potentially moving to. Okay, but within the window of the peak of the market cycle in 2025. And if we look at the numbers here, if the total crypto market cap in 2025 ends up around $10 trillion, which all lines are pointing to this, Solana's dominance, let's just say it gets to 2.7%. Let's just say that the meme coin market starts to peter out a bit because so many people have been burned by this time. And Solana doesn't necessarily have a new narrative to push through the media and everywhere else. And maybe, because this is what I honestly think is likely to happen. If the peak of the market cycle was somewhere around $280, then that means that likely some point around here, let's just call it $293. At this point, everybody that's ever bought into Solana will have gotten their money back, and potentially the profits associated with a lot of the meme coin ecosystems that they've also been investing into in the interim. And at this point, either, in my opinion, I think it's going to depend on how much money is spent, how much work goes into getting the price back to this point. Because let's assume for a minute that FTX and the FTT token played a significant role in getting Solana's price up to this point. Okay, let's just assume, because it happened so suddenly that it was just, up to that point that they're pushing the market. Now, let's just assume that starts to peter out and come to a halt because they don't have the help of FTX and Solana anymore necessarily that I'm aware of. So there's that whale is gone. So now it's up to the meme coin economy that they've been building and whatever they're able to accomplish in the media. So either one of two things is going to happen. Either one, this basically reaches a new all-time high, but then does an about face as all the whales liquidate and get out and move on to other blockchains, likely putting their resources and money into stuff that's a little less risky. or they go ahead and ride this as best they can to the next peak. And if the circulating supply at the time is 461 million Solana tokens, which how did that even get that high? Is that real? How did it even circulating supply? 461 million Sol. I don't even understand how that's like. That's insane. It's just grown like so much. I need to dive into that, because if it was supposed to be like 20 million at one point, I'm not sure. I'm probably way off on that. You guys will have to correct me. But anyway, even at 461 million tokens, it would potentially put the price peak at $584 if it were just to establish 2.7% of the dominance of the crypto market cap at a $10 trillion market. And I really do believe that we're going to have a lot of issues. Okay. And you know, currently trading at $141.38. We can see it's not doing so hot right now. And if you really want to get an idea as to what is going on in the Solana ecosystem, you can either go to myanalos.com, which is a meme coin that I started as kind of a joke, just to kind of open people's eyes to what's going on in this ecosystem. But you can just punch in Solana scam, and you'll get a really good idea as to what is happening in the Solana ecosystem, because people just, you know, they're tagging all the different scams, all the different rug pulls, everything that's just not very good that's happening on Solana, and just a lot of memes, a lot of stuff. But if you want to keep track of the ecosystem and what is likely to be expected on Solana, unfortunately, that's what you have to look at. It's like going to Walmart at midnight to figure out what's going on in the stock market. Unfortunately, that's just kind of the way the cookie crumbles for this. Now, I'm not saying that Solana investors may not do very well. I'm not saying that you're going to get burned right now, but I do think that Solana's days are numbered, and I really do believe that. Inferior tech, obviously, the way they've gone about building Solana, the way they've gone about building the narrative around Solana, the meme ecosystem that I believe is ultimately replacing FTX's involvement in boosting the Solana ecosystem with a lot of false narratives, rug pulls, and just sketchy stuff. And I just don't. But the thing is as long as the number go up, fundamentals be damned, risk be damned, nobody seems to care. And what people are doing is they'll take $1,000 and they'll throw $100 at every new meme coin that goes into Solana or that gets started on Solana. And then they try to play it with bots. And there are so many different bots that are algorithmically trading the Solana meme coin market, where they automatically buy the newest token on Solana, and then they try to trade the pump and dumps of a meme coin market. It's blowing my mind. Some people are making money. A lot of people are getting burned by it, but it keeps the volume high and it keeps Solana in the conversation. And I just think that the days for something like that are numbered. How many times in a year do you really want to go to an amusement park, especially an amusement park where you walk in and some people are falling out of the coasters? It's just not something I think is highly sustainable long term, but that's just my opinion. This isn't personal. This is just me calling it as I see it. So if this helps you make a good decision, great. Continue doing your own research. I implore you, don't get caught up in a lot of the sketchiness of blockchain in general. I'm not just talking about the meme coin market. I know that where we're at right now, we might get to a point where anything you throw money at could be like worth its weight in gold and all of that. But ultimately, you still want to be safe. And I've learned since 2017 that I really try to focus on what has proven itself time and time and time again. Honestly, Solana came to the scene like in its first market cycle. Let's just say it was 2020, rode a peak to 2021, came down, and here we are in the second market cycle, and really not much good has come of it. So you can ignore all of those details if you want to, expecting number to go up forever. But I really do truly believe that a lot of people are going to get burned. And that's just the way it is going to be. And I'm always right sometimes. So until next time, guys and gals, thanks for joining me. Crow your coins, and I'll see you again soon.